Well, we're here at TiECon in Silicon Valley in conversation with one of the original Indian origin entrepreneurs of the Valley, Sanjay Mehrotra. Sandisk, appreciate you joining us here on CNBC TV.
Good to see you again, Shireen.
Good to see you. So Sanjay, finally after 27 years, you've decided that it's time now for you to sell out in that sense. So Western Digital, a $16 billion transaction. You said no to Samsung in the past. Why yes to Western Digital?
With Western Digital, the SanDisk and Western Digital combination is really going to be unique and unparalleled in the industry in terms of providing our customer ecosystem with a strong value proposition, broadest set of portfolio solutions, and really a company with the deepest expertise both in HDD, hard disk drives, as well as flash solutions. So this combination really positions the company very well for the future.
But was it hard for you to finally say yes?
Absolutely. I mean, being there from day one at SanDisk, right? It's your baby. But the way I look at it is that babies are born, they grow, they mature, they move on. So this is absolutely time for the SanDisk and Western Digital marriage now, if you can call that. And it really positions our customers well, certainly provides a very strong return to our shareholders, as well as positions our employees in a bigger company. So it's really a great transaction, every which way you look at it.
By when do you expect the transaction to close?
We have said previously that we expect the transaction to close this quarter sometime.
Okay, this quarter. And how is life going to change for you? You, of course, will be on the board of the combined entity. Right. It's going to be different, isn't it?
Absolutely true. I mean, it is going to be different.
Are you ready for the new role?
I actually, to tell you the truth, I do not know exactly how that change will be, because it's been 27 years of really driving, pedal to the metal, right? Driving very hard the business, and it's going to be a change. I'm looking forward to be on the board of Western Digital to continue to help with the integration of the two companies and make sure the strategy of the combined company delivers the promise of the combination. But beyond that, I will definitely take some time off, but also look at some exciting opportunities and engagement with entrepreneurs. I mean, we are at TiECon.
Entrepreneurs in India, perhaps? I mean,
absolutely.
There's a lot happening in the startup space there, and we are seeing crowds from the Valley investing in Indian startups.
Absolutely. We'll be looking at, opportunities in India, opportunities here, and, basically be ready to share my experience of 27 years. But, we'll take my time to evaluate the opportunities.
Okay. So speaking of sharing the learnings of the last 27 years, it was really your persistence or your father's persistence that paid off, that got you here to the United States, to UC Berkeley, and then the start of your career. As a young entrepreneur who's watching this show, what would your key advice be as they start up?
For anybody starting a company, my advice to them would be, first and foremost, think big. Think big, but make sure that, you are understanding what your competencies are, and, take some calculated risk. Think big. But yes, you may have to take...
Did you always think big?
When we started the company, we definitely were thinking that yes, Flash will change the world in the future. And I want to tell you that when we started the company, Flash was a concept in the labs. It was not even a market, right? We must say that we never imagined it would get as big as it did. However, there was a vision that Flash is going to be needed in many kind of portable devices and notebook computers, all kind of industrial applications. So thinking big is important, but my advice to entrepreneurs also would be that be prepared to take small steps toward that journey, toward that end goal. And, as you take the small steps, if you have to adapt your strategy, be prepared to do so as well. And advice to entrepreneurs also is make sure you always are well funded, because you don't want to seek money when you really need it. You want to have money to fund your company, well ahead in advance, because I can tell you when you absolutely need it, you're not going to be able to get it.
That's right. But let me also ask you about the lessons that you learned when you decided to take SanDisk public in 1995. What was that experience like? What was the preparation that went in? How do you mentally gear yourself up? Because there are companies at this point in time in India also who are considering the possibility of an IPO. Take us through that process and your learnings from it.
For us, going IPO was a very important step in the history of the company, and absolutely one of the most exhilarating moments in the history of the company. It was important because our vision for Flash was that it's going to get big, We will need to be investing in the manufacturing infrastructure to really bring millions of units of our products to our customers every day, 365 days a year. In order to do that, we knew that we had to invest in manufacturing infrastructure. We needed access to the capital markets. So going public in that regard was very, very important for us in order to have access to capital markets to really build factories for Flash that we have today. Okay, but I have to tell you, the journey toward that IPO wasn't easy. We actually thought that we were going to do our IPO in 1993, and we had got off to a great start with solid state drives in pen tablets in 1991 time frame. Our 1991 revenues were 3 million. 1992 we did 20 million, and we thought we're going to grow the revenues and we'll have 1993 IPO. It so turned out that those first tablets were too clunky, too heavy. It was early adopters that drove our revenue from 91 to 92, from 3 million to 20 million. But then the market for that stalled because the products didn't have enough appeal. We actually changed direction at that point. We started selling our products in industrial applications, Flash in hand terminals, Flash on top of roof stations, base stations on top of roofs, etc. And many different space aircraft, and that drove tremendous revenue growth. It's a great example for entrepreneurs that while you keep an eye on your long-term goal, like we did on Flash, everywhere longer term, but in the short term, if you have to adapt to meet the near-term needs like we had of growing revenue, we were able to do that successfully, pivot toward industrial applications. And then in 1995, our revenue was more than 40 million, actually 60 million, and we went IPO. So it was really great journey, a lot of sweat, hard work going into raising the revenue to be able to do IPO, but that has been absolutely a key for us, and I would encourage entrepreneurs here or in India absolutely to eye that, and it's absolutely tremendous step in your journey toward growth.
Since we're talking about journey and we're talking about growth, let me also ask you about dealing with the down cycle and the downturns. And you've had to face a fair amount of that in your career here at SanDisk. Let me take you back to about that 2008-2009 period, which is difficult not just for you, but pretty much everybody else, given what happened on the macro front. How do you then pivot your company out of a down cycle, out of the tough times? What are the lessons learned from there?
Shireen, great question, and again a great example of how in your journey to build a strong company and a strong business, you always have to be adaptable and agile. The example you just cited here, 2008-2009 timeframe, the global macroeconomic environment was very weak. We had tremendous technology and products and manufacturing capacity, and we saw that our business was declining. Our business at that time was very much dependent only on removable flash products such as flash cards and USBs. At that time, in 2009 timeframe, we actually decided that we need to diversify our customer engagements, diversify our product portfolio, and broaden the scope of SanDisk business. We used that downturn to really come out stronger than before, leveraging our core competencies, staying focused on our technology, but changing our strategy to diversify our business. It was a real strategic transformation, and that led to the company going from about a 3 billion rate, where we were somewhat stuck in the 2008-2009 timeframe, to over 4 billion in 2010 in revenues. And since then, we have grown the business. In 2014, actually, we had done over 6.5 billion in revenue. So that's an example that when there are downturns, and any business will always have setbacks, you really have to stay on your course in terms of where your goals are, where you want to be, but adapt your strategy and make changes and be fast in making those changes, because the world is extremely competitive. And if you have core strength, you'll be able to emerge stronger from the downturns.
One of the other areas that I want to get your insights on is how do you get three founders to actually work together, because SanDisk was started by three founders. And often we see companies flounder because founding partners don't see eye to eye, or at least there is a strategic misalignment of the vision. What did you do in order to ensure that you were all on the same page?
Another great question, and I would like to point out that our three founders are actually three immigrants
Yeah.
here in Silicon Valley.
Yeah.
Ali Harari, the lead founder, Israeli,
Yeah.
Jack Yuan, Chinese, and myself, of course, from India. And I think our diversity of cultures really definitely positioned us well to adapt well to each other. And you know that when you start driving your business and your growth in a startup, there's lots of ups and downs, and you have to be very adaptable and understanding. Between the three of us, we had a culture of really listening to each other, understanding what is needed to be done, and really tremendous trust and respect within each other. But even more importantly, perhaps, we all had complementary strengths. Okay, Ali was really a device physicist. I was a design guy, chip designer, and Jack Yuan was a process engineer. So three engineers in that regard, and Ali also taking the lead in terms of raising the funds for the company, of course, while involving the two of us in that as well. So we essentially divided up our responsibilities pretty well, but we were always on the same page in terms of understanding where we are going, and we had passion, we had conviction, we had trust in each other. And I think that is very important, because businesses do go through ups and downs. You just have to have that trust in each other. You have to have that chemistry that is right between the founders. We consider ourselves very fortunate that our relationship lasted so successfully over so many years.
You talked about raising funds, and that's again an issue that a lot of young entrepreneurs grapple with. When do you raise? How much do you raise? Who do you raise from? What advice would you share on that front?
So I think, advice to entrepreneurs would be, let's raise funds from somebody who totally believes in you. Not just your idea, but really believing in you, so that they are prepared to bet their reputation believing in you. Because if you raise money from somebody like that, you know that they will be with you through the ups and downs, and they are totally invested in you personally. So in my opinion, that is a very important thing, that not somebody who's just investing in an idea, but also investing in an individual. Second thing for entrepreneurs is that don't get wrapped up in trying to hold on to equity the maximum, and worry too much about the valuation. I think, again, when you're thinking big, really think long term, and therefore make sure you raise money from the right sources, and be a little bit flexible in terms of managing the valuation in the early rounds. And what we did at SanDisk was, when we started, we took some venture money, but we also took some money from corporations.
The move towards digitization, the move towards now an experience economy, what kind of opportunities would you bet on if you had to start over today?
In technology, when I look at it, I mean, it's really just begun to scratch the surface in terms of IoT, right? I mean, there's going to be billions and billions of these devices all over the world that are going to be, enabling richer, smarter digital lifestyle for all of us, but also enabling the businesses to be able to do more. I think that definitely is going to have exciting growth, related to Internet of Things. Also, cloud, because everything in terms of running businesses, service, whether for consumers or businesses, cloud is only going to get bigger and bigger. And that has been an exciting area for me over the years, because for all that means more and more data. Data is only goodness for Flash, right? So I've been very well in touch with that business, and I think that's where the future is. I mean, the future is just gonna be so exciting. If you look at just the last 10 years, technology has advanced at a pace that is mind-boggling. I think next 10 years is going to be even more exciting. Just hold on to your seat belts. It's going to be an exciting ride.
Hold on to your seat belts. It is going to be an exciting ride. Sanjay, it's been an absolute pleasure speaking with you. We wish you the very best of luck. Thank you for your time here in the Valley. Thank you so much.
Thank you so much.
Well, with that, it is time for us to wrap up this special edition of Voices from the Valley from all of us here. Goodbye. Many thanks for watching.